You're self-employed. You work for yourself. No boss, no W-2, no office politics. But come tax time, you suddenly meet the IRS alphabet soup. Form 1099, Schedule C, Schedule SE, Form 1040. Estimated tax payments. What does it all mean? In this video, we'll break down every tax form you'll deal with as a self-employed worker, freelancer, gig worker, creator, or small business owner. Let's decode the chaos. 1. Form 1099-NEC, your income report. This is where it all starts. If you earn over $600 from a client, they file a 1099 NEC, non-employee compensation, with the IRS and send you a copy. This form shows how much they paid you. And guess what? The IRS gets it too. So if you forget to report it, they'll know. If you do side gigs on Fiverr, Upwork, DoorDash, or YouTube, you've probably seen one of these. Keep all your 109s organized. Sometimes you might receive multiple 1099s from different clients or platforms. Make sure to report all income, even if you don't get a 1099 for it. The IRS expects you to report all earnings. Second Schedule C, Form 1040, Income and Expenses. Now that you've got income, you need to report your profit. That's where Schedule C comes in. It's part of your personal tax return, Form 1040. Here's what you do. List your total income. Subtract your business expenses. Common deductible expenses include equipment and supplies, phone and internet bills, mileage and vehicle expenses, business use only, software subscriptions, travel and meals, subject to limits, and home office expenses if you qualify. Tracking these expenses carefully throughout the year can save you a lot on taxes. Use apps or spreadsheets to keep receipts and records organized. Remember, only expenses that are ordinary and necessary for your business count. Personal expenses don't qualify. 3. Schedule SE, self-employment tax. Made a profit on Schedule C? Congrats! Now you owe self-employment tax. Schedule SE calculates your Social Security and Medicare taxes. Normally, your employer covers half of these taxes, but you're the boss now, so you pay both sides, roughly 15.3% on your net profit. The good news, you can deduct half of this tax on your Form 1040, reducing your taxable income. The big one, your personal income tax return. Everything flows here. W-2 income, if you have any, 1099 income, your Schedule C profit, your self-employment tax, from Schedule SE, your deductions, credits, and final refund or tax bill. If you're fully self-employed, your entire return is built around this form. 5. Form 1040-ES, quarterly estimated tax payments. There's one form you don't file once a year. You file it 4 times and skip it at your own risk. If you expect to owe $1,000 or more in taxes for the year, the IRS wants their money before April. Use Form 1040-ES to make quarterly estimated payments in April, June, September, and January. These payments cover your income tax and self-employment tax in advance. Don't pay? You might face underpayment penalties. Pro tip: use apps like QuickBooks, Keeper, or TaxAct to calculate and auto-send your estimated payments. 6. Form W-9 for your clients. This one's not for the IRS. It's for your clients. When you start working with someone, they'll usually ask for your W-9. It provides your name, address, and taxpayer identification number so they can report payments to the IRS on Form 1099 NEC later. Fill it out once per client, usually before they pay you. 7. Form 8829, Home Office Deduction. If you qualify for the Home Office Deduction, you can use Form 8829 to get a detailed deduction instead of the simplified method. This form lets you break down square footage of your home office, utilities, rent, or mortgage interest, and cleaning services. It's optional and a bit more complex, but worth it if your home office takes up a significant portion of your space. 8. Forms 1095A and 8962, Health Insurance Marketplace. If you bought insurance through the government marketplace and received premium tax credits, you'll get Form 1095A. To reconcile those credits, you file Form 8962. Miss this step, and your refund could be delayed or denied. and business structures. While this video focuses on federal forms, remember that many states have their own tax filing requirements for self-employed individuals. Some states require quarterly estimated payments, business income reporting, or sales tax filings. Check your state's Department of Revenue website for details. Also, if your business is structured as a partnership, LLC, or corporation, additional forms and rules apply. For example, partnerships file Form 1065 and provide K-1s to partners. S corporations file Form 1120S. Corporations file Form 1120. If you're unsure about your business structure or tax obligations, consulting a tax professional is highly recommended. Still here? That means you're serious about self-employment, so don't let taxes trip you up. Subscribe now and check out the next video. You work for yourself, now file like a pro. See you in the next one.